The first slide is a generic summary about what has happened in the market as of today. So the market is constructive, but it is not in a euphoric phase. And it is relatively narrow at the top. I'll explain this also. As of today, there are 58% stocks in the NSE universe that sit above 50-day moving average. For 200-day moving average, that number is about 53%. So just about half of the market has climbed over 200 DMA and 58% above 50 DMA. And this is all stock universe. That is about 2,580 stocks or thereabouts. Out of those 2,580 stocks, 680 stocks are in stage 2 uptrends. What is a stage 2 structure? If you go down in the comment section, I always recommend a book by Stan Weinstein, How to Profit in Bull and Bear Market. That is the Bible of trading, in my opinion, long-term investing also. If you go through that book multiple times, you won't require anything else in your life. Of course, combined with the teachings of William O'Neill and Peter Lynch. So stage 2 basically is clear higher high, higher low structure, rising relative strength. That is, stock is an outperformer. So 680 stocks today are outperforming. When it comes to, if you look at the previous slide, there are 3 headings here: composite, relative strength, stage 2. You know what is stage 2, you know what is RS. Composite is just a score I calculate based on breadth metrics. So based on that, small cap roughly has a 70% kind of score. Large cap still has 50%. So which means still in the market, it is the small cap, the mid to small cap, micro cap space that is doing well. And the poorest score is for IT. Everybody knows that. So what is leading the market? It is defense, power, private banks. This is a big surprise. And if you've been following the discussions here, banks, defense, capital market, and metal. This is a theme I've repeated so many times. Especially defense and capital market is our very own AI moment. Do not miss these opportunities. It's a multi-decade kind of an opportunity. And these are relatively newer sectors in our market. And every major correction, look at these pockets. By the way, I'll open up some specific breadth data also. A lot of names in defense, capital market, now in private banks, in pharma, healthcare, metals. Since 30th March, those names are 80, 80, 90, 90, triple digit up. All right. So again, the point that I've been highlighting in the last 3-4 weeks, it is data versus whatever is being said. So what is broadening in the market? Broadening means some other sectors have also started chipping in. Industrials, auto components, electric equipment. These are getting into sustainable stage 2 movements. And clear laggards are IT, cement, FMCG, paper. We'll come to those specific pockets also. So this is the broader market bird's eye view, if I want to put it this way. If you look at which pockets have the highest composite rating along with RS rating, what is RS rating here? Number of stocks that are outperforming the broader market, something like Nifty 500 also. So almost 61% stocks in micro cap, small cap 50, small cap 100, small cap 250, about 60% in mid cap 50, 60% in mid cap 150 are actually outperforming Nifty 500. That is the kind of outperformance that is currently going on. And naturally, because these stocks are outperforming so much, clubbed with the stage 2 kind of structures those stocks are forming, obviously this is the pocket where a lot of traction is currently happening. So look at Nifty 50, Nifty 100, Nifty 200, Nifty 500. So largely the top 300, 350 stocks is where you're seeing a lot of selling. So large cap, which is represented by Nifty 50, 100, 200, roughly the ratings are about 50. That is about 50% roughly stocks are in a constructive structure, not even an outperforming structure. Whereas this is the meat of the market. This is where action is happening still. Micro cap 250, small cap 50, small cap 100. Now within Nifty 50, there are some things that are changing. I'll explain that in a bit. So this is the trend health across the universe, right from Nifty 50 to something like small cap 50. Look at how many stocks are above 50 DMA, above 200 DMA, above 30 weekly moving average. And stage 2, how many stocks are in stage 2 structures. Now, there are some softwares that will give you a stage 2 kind of percentage. My personal experience is that don't rely on it. It is a painstaking process of going through stocks manually and marking them as stage 2 structure, because that is when you'll be able to do it properly. Some algorithms can do it, but still I would tell you 15 to 20% error comes in that. So take something like Nifty 50, 18 stocks are in a confirmed stage 2 structure. But when you see the 50 DMA and 200 DMA, you'll see the colors start to change as we go towards large caps, which means still the strongest pockets of the market are small cap, 250, micro cap, mid cap select. So if you, for instance, like a particular sector, first look at the smaller stocks because that is the theme. Now, this is as of 18 June. All right, this is a simple RRG chart. My RRG charts are a bit different in terms of sensitivity and also in terms of how I look at it from short term to medium term point of view. So if you open up RRG charts on some different softwares, you'll get a completely different reading. It's just because of sensitivity. So this is as of 18 June. I'll come back to this chart. But as of 18 June, you're seeing strengthening of small cap 250, small cap 100, mid cap 50, small cap 50, mid cap 100, mid cap 150, total market, and bank Nifty. Can you see this big circle here? This is where things have changed. And when it was coming to some bearish economic data, even 1 month down the line, or 15 days back when I made my previous update, go through my comments about banking sector. Indian banks have never been in such amazing positions that they are in today. Again, because things are linked with price action, it is always perceived that the sector is not doing well. That was never the case. And look at how swiftly Bank Nifty has moved up 8 to 10%. And look how Bank Nifty has changed things as well. All right, I'll also come to that. So this is as of 12th May. Now, this is the same chart, same components. I've broken it down over a period of 1 month. On 12th May, this pocket that you see, this is all Nifty 50, Sensex, Nifty 500, total market, Bank Nifty. This was all here. Over 1 month, you started seeing gradual kind of improvement, more strengthening and consolidation of leading pocket. And then in 15 days, as Bank Nifty has started doing well, so this is Bank Nifty, this is total market. Now you see more strengthening of the leading pockets, plus Bank Nifty has moved here. So Bank Nifty alone, I would tell you sentiment wise, because Bank Nifty is represented here, as Bank Nifty has moved from here to in this quadrant, it has actually taken the total market Nifty 500 also along with it, because it is a sentiment kind of indicator. It might take 1 quarter, but just wait and watch what Bank Nifty will do to this entire market. So that is how things have transitioned. Now, I'll speak about specific industry groups. For the time being, I was talking about broader market, that is small cap, mid cap. I just included Bank Nifty here because it is so important for the market. But now, which industry groups are doing well? So the top ones are defense, banks, telecom. I've left this engineering services because you look at N here, which means there are only 2 stocks there. So this categorization, whatever data I've pulled out, everything is from nseindia.com, niftyindices.com. Of course, the visualization part, is figment of my imagination, but the data, how industry groups are divided, how various sectors are classified, all is there on nseindia.com, niftyindices.com. You can also refer to screener.in for it. So aerospace, defense, 90% stocks above 50 DMA, 200 DMA, 86%, 30 weekly, about 56% stocks are in clear stage 2 structures. Banks, this has been a big surprise. Surprise for naysayers. Because if you would understand the quarter gone by in terms of results that came out from banks, they were absolutely fine. What has been happening in the banking sector? It is silent improvement of banking sector per se. But again, because it is linked with price action, you tend to feel nothing is happening. And let me tell you, it is just the start. If 12 months down the line, banks are not amazingly higher from where they are today, of course, I'll come out and say I was clearly wrong. But look at my commentary in March about specific sectors. Look where those sectors are today. Similarly, mark down banks today. Let it retrace 3-4%. I hope it does. It would be an amazing opportunity to accumulate. And whatever I speak in this video is not a investment trading advice. Please consult your financial advisor for that. But I can, of course, speak about what I'm doing. So telecom and equipment accessories, metals and minings, gas, electrical equipment, non-ferrous metals. Look at this data here. Pharma is a big space. Something big is happening in pharma. Again, in the smaller names. Why smaller names? Because this is what this particular chart is telling us. Healthcare services, IT hardware, capital markets, and industrial products. So this is the only industry group for the time being that I am looking at in terms of measuring the strength of the market. The weaker pockets are easy to identify. The weakest is IT, entertainment, beverages, fertilizers, healthcare equipments, leisure services, that is hotel groups, realty, construction. So this is also a reflection that economy in general, from stock market point of view also, there are a lot of pockets where economy is struggling. Your job is not to focus on what is struggling. Your job is to focus on what is doing well, because that is where opportunity is. Nifty 100, 200, and a couple of other indices, they are flat. Rather, Nifty is down 8% for the year. Look at what defense capital market, now banks, mid caps, small caps have done. Double digit returns these pockets have given. So you need to know where to look at. And all you need is a relative strength line. That is sector divided by Nifty 500. Whichever sector is rising, that means there is strength in that sector. So how do you use this? Any pullback in the market, you tend to look at these groups and see which stocks you like. Again, go for smaller names, not for the well established big names. So now how the entire rotation of industry group has happened over time. So again, you can clearly see the winners here. Now banks has moved with such strong momentum in recent times, especially led by private banks. But why people were not focusing on private banks? I will tell you the answer. The answer is constant kind of obsession about FIIs selling. And because banks have such weight in Nifty 100, 200, obviously banking sector was being sold into. And hence linking with the fact that because FIIs have started dumping, this sector cannot do well. And look what happened. 8% just went away. A blink of an eye. This is a snapshot of 1st Feb of all the sectors. Only metal was standing here. All sectors were down, beaten down heavily. In March, these groups were also here, which is why I did a sector video in March, I think, where I was making a point. There are so many good sectors that have been beaten down, and that is just an amazing opportunity. But you will have to understand that amazing opportunity will always coincide with horrible news. Amazing opportunity will never coincide with good news. That is the nature of market. So when it comes to the leadership, where is the leadership in the market? Now, this is again as defined by NSEindia.com. It is defense, private bank, capital market, pharma, financial services, overall banks, includes PSU also, healthcare, mid and small healthcare, housing, energy, infrastructure, infra and logistics. This is the leader pocket of the market, and it is not changing. There's just one name I haven't added here, which is metals. I think metals I have left out. It's a mistake, but metals also. So in between, what will keep happening? Now, if you see metals has started moving a bit lower, banks have come up. Defense has suddenly moved up. Now defense will start consolidating, probably capital market and pharma will again move up. So the rotation will keep happening. But this is a space that is not doing well. SME, PSU, IT and telecom. Now, IT and telecom was one of the strongest groups, but it is a different kind of IT and telecom, which includes equipments. So you will have to go and check if you want to go to the group level, that is industry group level, to figure out which stocks are in these groups. And I've purposely categorized it in such a way that even if you open up screener.in and put which stocks are in India, railways, PSU, you'll get the list of stocks. Okay, so rural is not doing well, consumption is not doing well. These pockets will also pick up. There is no way rural and consumption is not picking up in India. Just give it little time. FMCG, rural consumption is going to see a bump up in coming months. So now, where do we stand in terms of rotation? So first I will pull up. So this is the exact map. Now I'll just tell you what happened. On 1st Feb, nearly everything here was in this quadrant. Everything was collapsing. 11th, we started seeing some bit of movement happening. Over 1st week of June, again, more movement. Now do you see why this cluster is forming here? It is forming only because of one index, let me tell you, that is bank, private bank. I would tell you, for people who observe market very closely, Nifty bank is what NASDAQ is to US market. So Nifty bank is to India what NASDAQ is to US market. There is no way US market can really move up with strong breath if NASDAQ keeps falling. It is the same thing for Nifty bank. Because Nifty bank has some of the biggest FII holding stocks also. It's a sentiment indicator also. It is widely tracked by FNO participants. So basically, you cannot quantify the impact of Nifty bank when it comes to its impact on overall market. But a healthy Nifty bank, I would tell you, would do wonders for the market in months ahead. See, when we started falling in the month of November 2025, which space was leading the market till then? It was actually Nifty bank was holding up very well. That is why relatively the markets were okay. Why markets started correcting in Jan? Do you know? Look at the chart of Nifty bank. It started breaking down. So Nifty bank somehow, and this is not a coincidence. Ask any market participant who has been tracking markets closely since 10 years or 15 years. He'll tell you that the impact of Nifty bank is just phenomenal when it comes to sentiment. Nifty bank just flips everything. In today's context, I would tell you it is not that it is going to flip everything in a month. But as Nifty bank is continuing to sustain above 200-day moving average, you will start seeing more and more pockets moving towards this quadrant. And sometime 2 months down the line, and again pull out this bread data for you just to show you what has happened. So this was as of 1st Feb, and everything was beaten down. Defense was also beaten down, and the journey that these sectors have made here, this is an average difference in terms of stocks, 50 to 70%. That is why never ever be afraid of the market when everything is collapsing, because a collapse is an opportunity provided you know where to look at it. But if you keep focusing on AI, you keep focusing on the Indian story is gone, these opportunities will always pass by. So being optimist and knowing where to look at, that is the key. So this is as of 11th May. Even 11th May, if you see, PSU Bank was here, banks were here. The initial recovery period, Bank Nifty did not do that much. 1st June is when you started seeing some movement in some sectors. It is only after 4th June you will see. So this is what has happened between 1st June and as of yesterday, 18th June. Look at where Bank Nifty has gone. And this alone has shifted total market, Nifty 500, even Nifty 50. And the more Bank Nifty begins to trade above 200 DMA, sustain, that is, you will start seeing more and more participation in terms of large caps. Also, you'll also start to see FII's number will slow down in terms of selling. In fact, I would tell you that I would be very surprised if FII numbers don't start to turn positive. I don't know the quantum of it, but next 6 months could be different. So if I get a pullback in the market, or if I see a pullback in the market, it is pharma, capital market, private banks, metals, defense, power. This is just the theme I'm interested in. ETFs also. If someone does not know how to look at stocks, just look at ETFs. There are so many ETFs. Market regulator, NSE, has done such a fantastic job in giving you so many ETFs. You have an ETF for defense, for power, private banks, metals, capital market, pharma, healthcare. Everything has an ETF. What is broadening? Auto sector is starting to broaden out a bit. Capital goods, industrials, some bit of infra and logistics is also broadening up. And of course, small and micro caps are continuing to spread their wings when it comes to various sectors, but the smaller names in those sectors are picking up. For pure value investors, IT, cement, FMCG, paper, fintech, media, these are lagging at the bottom. And again, today, if you see, look at the IT sector news flow. IT sector news flow is just not great. IT sector news flow is so negative. Again, comparison with AI, although our IT sector is completely different, their guidance is still okay, nothing phenomenal. But you cannot expect our traditional IT companies to guide like the AI companies in the US. So people are also comparing, who are critical of our IT sector, are also comparing, two different things and putting them on the same platform and making comparisons. But again, I mean, you cannot stop this ever. This happens in every market. So for pure value players, it is this pocket that is looking quite lucrative. Your job is not to see what is not working. Your job is to see what is working and then devising a strategy around that. So focus on such charts where recent improvement has happened. This is something like a Nifty Bank, a beautiful contraction is happening. Price is now finally above 50 and 200-day moving average. Can it fall? Anything can fall in market. But this is a genuine pivot breakout that has happened. It can consolidate a bit and again head higher. Focus on such charts that are improving. Then this chart is of defense. Look at the wonderful move that has happened. Are you going to get back 7,500, 7,300 in defense sector so soon? You won't. But again, that is a lesson. News flow is negative. Look at the spaces that are holding up. Will always, over a period of time, do well. It is always about over a period of time. It is never about tomorrow, day after tomorrow, BTST, those kind of things. This is small cap 250. Again, look at the chart. There is a message here. You need to focus on such charts. Again, this is a base, as opposed to such charts where nothing is happening. This is Nifty 100. So if you continue to look at Nifty 100, 200, Nifty 50, GIFT Nifty, things won't appear to be great in the market. By the way, my personal assessment is that these pockets will also pick up. I can be completely wrong, but for the time being, my focus is always on groups and industries that are doing well, not on laggards. But if I were to give my opinion about the broader market space when it comes to large caps, I think improvement is coming there also. But if you get pullback in the market, focus on strong leadership pockets. This is the thing you need to do. Don't worry about this. Is IT undergoing problem? Yes, everybody knows it. FMCG is going through some problems. Digital is going through some problems. Railway PSUs have had wonderful 2020-23 cycle. Now it is going through some problems. But this is not the entire market. There are some groups that are doing this also. Focus here. Don't focus here. If you This will always make more headlines. Why? Because again, I've always explained negativity sells big time. This is always looked as a missed opportunity. Now, what is next? That is not how stock markets function. What is strong keeps getting stronger. What is weak keeps getting weaker. This is something Jesse Livermore taught, I think, 70 years back. All right. So have a great weekend ahead, guys. The last week's all comments were answered. Make sure your comments come in on Saturday itself. In case this video is coming out on Saturday, if it's coming out on Sunday, make sure it comes on Sunday itself. And I'll definitely answer those questions. So take care and be safe.